You're listening to the Homeownership podcast by Momentum Realty, real estate talk for buying, selling, and owning property.
Hey guys, Sean Patrick Maloney here, broker owner of Momentum Realty, located in Hanover, Massachusetts. Welcome to episode 8, the first step, pre-approval. I'm your host, Sean Patrick Maloney. I'm here today with mortgage professional Chris Devin of CrossCountry Mortgages.
Hey Sean, thanks for having me.
Not a problem, Chris. I'm really excited to talk today about pre-approvals. I think this is one of the steps that a lot of people hesitate towards moving forward on a home. One of the first things I want to talk to you about today is the fear of the unknown, the fear of the denial, the fear of getting pre-approved, and why so many people sit on the sidelines. Like, what does it take to get a pre-approval? Like, what are the first steps, Chris?
Well, what's interesting, Sean, you brought up a great point, is there's so many people that are just nervous about it. They're afraid to take that first step. And talking to tens of thousands of people over the past 20 years, people sometimes wait, a year or two after they first start thinking about getting pre-approved, just strictly out of fear. And really, if you break it down in today's world with technology, the process is really pretty simple.
When do you think a person should get into the process of getting the pre-approval? Like, at what point should they start? Should they get out looking at houses? Should they get started before that? When should someone start on the pre-approval process?
Great question. And I really think it's important for somebody to make the pre-approval their first step. And here's why. It's because I'm sure you've seen this on the realtor side, that once you get going and you start showing people property and they get their mindset on a price point or type of property, it's tough to unwind them from that. And unless you know what you really qualify for, you don't want to set yourself up for failure, right? So, getting yourself pre-approved, lining up all of your finances, an application is really the first step. In all honesty, it probably takes 10 minutes. Okay. So it's 10 minutes of your time to fill out an application. They're going to ask you for your name, your address, your social security number, your place of employment covering 2 years, and how much money you have in the bank. Okay. On top of that, you're going to have to provide documentation, W-2s, pay stubs, tax returns. In today's world, that's usually just a click and drag into a folder off of your computer or laptop. So timeline wise, for people that have their stuff together today, we're seeing people get their information to us within a couple hours in an afternoon. And we can really, at that point, gather information and over the next 24 hours, put everything together and give them a solid snapshot of what their purchasing power looks like, right? And breaking down payments, down payment, timeline, what it will take to get into the property, and you're really arming the person with everything that they need to be successful to jump into the market.
That's a great point, Chris, because as a real estate agent, as you know, we go out and meet with people and we're going to go shopping. And one of the first questions that we hate to ask, but we love to ask, is what is their pre-approval amount and what can they actually afford? And a lot of times people are a little hesitant to tell us their pre-approval amount. They're a little bit cautious of it, but one of the things is important because, like you said, you really don't want to be out shopping for $400 and realize you have to buy $350 because it can be pretty painful to move down. That might be the difference between a master bedroom or a garage. So it's really important that they have that pre-approval coming into the overall operation. So I noticed you mentioned that they can do the approval online. So I know a lot of people are hesitant about online portals and getting in and sending over the information. Tell me a little bit about how the online portal works with yours and the security behind it a little bit.
Absolutely. I mean, the industry from a compliance standpoint is so protected these days. And of course, there's the craziness on the other side with hackers and stuff is advancing as well. But our encryption and everything is basically protected by the company, and they're making sure that they're at the highest level of security so people's information is secure. We use a system called Transfer Safe that people can upload documentation right in to the portal. It makes it super easy. You can see the same information that we can see on our end. And for those people that still don't believe in the safety of the online application, you can come into our office, and most mortgage companies will allow you to come right in. You can sit down with the loan officer, or you can do it over the phone, really whatever works best for you.
That's great, Chris. I like to hear that because I do think that the online portal is the best option. I do believe in the safety of the online portal and also the convenience of being able to do it from anything from your mobile phone to the computer. I wanted to ask you a question that commonly comes up. A lot of people ask me what the difference between a bank and a lender is and what the benefits of working with a lender is. Can you tell me a little bit more about the process on that?
Absolutely. Basically, lending has three different avenues that you can go down. The first one is the bank. Okay, that's the obvious. It's actually where I spent my first 5 or 6 years in the business at Chase Bank. And benefit to the bank is it's brick and mortar, right? In most cases, it's where you might do your personal banking, your checking and savings. And it's, for a lot of people, friendly faces and familiar place to go. It's a little bit different in that the banks are a great place, but tend to be a little bit more conservative, number one. Number two, they're limited to their rates and their products. Okay. So benefit of having that place that you're used to walking into, but a little bit more limiting than other options. On the flip side, you have what's called a mortgage broker. A lot of times people refer to me as a mortgage broker, and I'm actually not, but the mortgage broker is a middleman. Okay. So what they do is they go out and they look at a bunch of different options, all the big banks, say Chase and Wells and Citi. They can look at all the different options, find the best fit for you and your loan, which is great. They're going to shop to get you the best rate. The negative is that there's not as much control. So they're going to ship that loan. Let's say it's Wells Fargo, fits your profile best. They're going to ship that loan off to probably Lincoln, Nebraska, where Wells Fargo Service Center is located. And Wells is going to process, underwrite, and close the loan. The negative to that is that you kind of lose control, and the mortgage broker is really just a middleman. So he has to call into a service center to find out the status of your loan application. And Sean, I'm sure you can comment to this. And sometimes you need information quick. Sometimes it's at off hours, and it's not easy to track that down when a third party is involved.
Yeah, I've been involved in quite a few transactions over the years, and I much prefer being able to call a Chris or a Mark or a Matt. We'll just use any name here as an example over calling Chris or Mark so that he can call the call center so that he can say, I'm loan number 15726ZYQ, and then realize it's past 5 p.m. and we can't get answers till tomorrow because the fortunate and unfortunate part of being a real estate agent is this business never sleeps. So tell me a little bit more about the benefits of what is an actual lender.
So the third option is a correspondent, or many call it direct lender. Okay. So that's what I am. We're a CrossCountry Mortgage. I've been in this type of lending for the past 10 plus years. And I really consider it the best of both worlds because we're able to shop on the buyer's behalf as well. So we're looking at all the big banks. We're looking at local institutions. We're looking at, first time home buyer programs and the state bond programs. We really have everything in front of us. The benefit to what we do, though, is after we're able to find you the best rate and program that fits your needs, we don't have to ship it off, okay, to that major institution and their service center. We do processing, underwriting, and closing in-house. And there's a huge benefit to that in that I always tell people we can move like a speedboat, whereas the banks and a lot of brokers move like cruise ships, okay? So there's no right or wrong answer, but so my first point is that we really are the best of both worlds. You get not only a super competitive rate, but everything is in-house. You're working with a team that's local and easy to communicate with.
That sounds great, Chris. So I want to bring up the next point. We were talking about the three different options. Sometimes I get somebody and I'm talking with them and they're like, I've already been denied on a pre-approval. Why should I even try again? But I come to find out that they worked with a bank where they didn't fit in any of the products. Can you explain that just a little bit further? And also, just want to highlight one deal that we did together. One of my agents had a deal and the person was pre-approved for $300 and you were able to get them pre-approved for $350, which opened a whole new avenue of homes to them. Can you tell me, why is that? And what would be the difference in, why should someone try for another pre-approval? What makes that worth it?
Sure. And going back to the differences between the banks and the brokers and the direct lenders. The banks, a lot of times, not bad-mouthing them by any means, they're a great option, but a lot of times tend to be more conservative. Okay, so they might not have the same programs available that a broker or a direct lender have at their fingertips. And in the case that we were talking about working together, if I remember correctly, the bank was just able to offer them conventional financing and didn't have a first-time home buyer program that had a little bit more flexibility. It allowed for a little bit higher debt-to-income ratio, and that's what was the ultimate solution for that buyer. What I also find interesting, and people don't realize this, is that the loan officer, the person you're working with in their team, it truly does matter. Their experience matters, just like with a real estate agent. Too often people walk into, I'm going to say Bank of America. There, I said it. You know, everybody knows B of A. Okay. But what they don't realize is that the person taking that loan is not required to be licensed. They might also, sell checking and savings account. They wear a bunch of hats. Okay. And where a loan originator who's at a correspondent lender or a broker is licensed. They have to go through testing. They have to go through continuing education, and their experience with working through loans matters. And it was a perfect example in your case where we just had to massage it a little bit more. You had to ask more questions. You had to talk through the scenario, and it really benefited the buyer in that situation.
That's excellent. That's really good news, because I know a lot of people rule themselves out, or they go and they get one denial and they don't go and explore options. So it seems like it's safe to say that if, you went to a bank and you didn't get a pre-approval, that you may want to option the lender source and to try out seeing if a lender could make you fit.
I would encourage people that if they do get denied and in their gut they feel like they could qualify, it's at least worth having a conversation. An experienced loan officer will be able to ask the right questions up front and be able to establish any major issues through a conversation. And if they think that it's worth applying and trying it again, it's probably worth your time.
So let's go over a big question I'm sure most of the listeners have. What kind of adverse effect does doing a pre-approval have on my credit report?
That's a great question. Come up against this all the time. And it's fake news out there that when you pull your credit to apply for a pre-approval, that it's going to have a negative impact on your credit score. To have credit, you have to establish credit, right? And mortgages are one of the number one drivers to improve your credit. What's bad for credit is if you're applying for multiple different trade lines in a short period of time. So if you're going to get pre-approved and then you also were at the Gap and you opened up a card, like all the stores do, to save an extra 10%, apply for this card now, and you're looking to buy a car all within a short period of time, that's going to have a negative impact on your credit score. I've seen people drop from 780 or think they were, perfect credit to in the high 600s in a short period of time. And that's 9 out of 10 times the reason why. But in regards to being a serious buyer and really trying to figure out what you qualify for, you got to pull your credit. You got to do a hard pull, get pre-approved. If you have good credit or any type of credit, really, you have to go through the motion. The type of report that a lender is going to pull is the best credit that you can get. I think there's over 40 different algorithms or types of credit out there, and people don't realize a lot of times they go on these online credit scoring modules and they even pay money for it. And they come and say, I was on such and such site. My credit score is 795, and we pull it and they're 711. Not that that's bad, but it's obviously lower than 795. And what people don't realize is that the mortgage lending, algorithm is different than other scoring systems. So the one that's used for mortgage lending is the best that you can get. It's going to be a tri-merge report. If there's any issues with your credit, you're going to be able to fix it, which is why we always advise to start with the pre-approval. Because if there are any hurdles to fixing credit, it's best to get them fixed and out of the way up front rather than dealing with it when they're with you on a Sunday afternoon, hot to trot to put in an offer and haven't applied yet.
Sure. So, Chris, you brought up an interesting point there. On a denial, if a person's going to then try to get on a plan, like some sort of step plan, and really try to get to a point where they can get a pre-approval, do you guys have any sort of programs or anything that could help them run future projections of where their credit report could be and what they could do to make those steps happen so they could get on a real-life plan towards becoming a homeowner?
We do. And going back to the point that the person driving the bus from the loan side matters, is through experience, a good loan officer is going to have access to a rescore model like you're talking about, where we can plug data into the system and say, okay, well, if this is brought current And if this balance is paid down by $1,000, and if this is seasoned for another 30 days, then this is what your credit will look like, and it will put you in position to buy. So by working with a true professional, that's going to open your eyes to what your scenario could look like if you're getting denied up front.
Wow, that sounds like a really cool tool. Well, now that we've talked about the pre-approval and we've realized that the first step to buying a home is really to get that pre-approval going, I just want to dive in just a little more on the pre-approval and talk about two categories that seem to always come up. My agents will be out working and they're working on selling a condominium. The person comes in with a pre-approval and they don't realize what is included within that pre-approval. And then obviously the dreaded F word, flood insurance, and how both condo and flood insurance affect a pre-approval number and how you need to shop diligently. So can you tell me a little bit more about how a flood insurance or a condo fee will affect my pre-approval?
Sean, great question. I'll start with the fact that one of the number one question that we receive from people that are not familiar with the process when they first come to us is, what's the maximum that I can afford? And I hate to sound like Debbie Downer and try to push people away from that maximum number, but it's really impossible to give anybody a maximum number because of the fact that there's so many moving parts that go into what you qualify for. Okay, you're bringing up two perfect examples of a condo fee or homeowners association fee and some properties that have flood insurance. Okay, so a good mortgage banker or broker or lender is going to work it into a safe area and go over those numbers with you of what the range would be. Not only is it just condo fee and flood insurance, but it might be taxes in a town. Okay, especially here on the South Shore, there's many towns that are right next to each other but have completely different tax rates, and that impacts the purchasing power as well. So what my advice would be is to work that through with your lender, get into that comfort zone of a town you think you're going to be looking in, or a couple towns, and take a look at the market at your price point or projected price point and look at a round number of what those condo fees are going to be and build that into the pre-approval. Share that information with your lender. The lender should be asking you, but that's something that should be discussed. And that can have a major difference, especially if you go into, like, let's say downtown Boston. You know, with all the development in the seaport, you might have a 3-family conversion condo in Southie and the condo fee is $150. And a half a mile away, there's a new construction building, same exact price point, and the condo fee could be $1,200. That has a major impact on what you qualify for. And in short, the flood insurance is really the same concept. We're lucky to live by the water. We have a lot of beautiful real estate right here locally, right on the water. And with water comes flood insurance a lot of the times. And those policies have a drastic range. I've seen properties that are a little ways away from the water that have huge policies, and ones that are closer but are on stilts that don't have as a significant of a policy, but something that you want to look into up front. The listing agent should have an idea, can ask the current homeowner. If not, talk to your insurance agent, have them run the numbers, and you want to make sure that when you're running the numbers before you make an offer, that information is in your calculation.
So it sounds like transparency is key with clients when they're working with a mortgage broker, that you really don't want to have this strange fear of the unknown working with the mortgage broker, that you really want to be honest with them and talking with them through the entire process so that you don't get to that finish line and not be able to get your pre-approval for the home that you think you have after you spent a lot of time into going out to the open houses and showings and everything. So you really want to ultimately reach out to your lender or mortgage professional earlier in the game and make sure they're in the loop during the whole process.
And don't hide anything up front. It's going to come out in some way, shape, or form. It just is.
Yeah, and I can say as a real estate agent, that's something that I always give people for advice is anything that we're just trying to turn our backs on is only going to hurt us worse, because we're going to come out 20, 30 days out and we're going to end up having it flunk out. And yes, there is a mortgage contingency to do with most home purchases, but that said, there's nothing worse than spending the money on all the different items like an appraisal and things, only to find out that we skipped over one step and that the home inspection and other monies were wasted in the past. Well, I really appreciate you coming in here to talk today, Chris, with us about pre-approvals and everything to do with the process of getting one. Do you have any other advice before we take off here, Chris?
No, guys. I mean, my last comment would be, don't be afraid to get pre-approved. If you're thinking about doing it, please feel free to reach out to us. But ultimately, no matter what lender you go to, just be prepared. I would have last 2 years W-2s, your last 2 bank statements, your last 2 pay stubs, and preferably your last 2 years tax returns, especially if you are self-employed or have significant commission or bonus income. Your personal information ready to go. And if you walk into a conversation ready and armed with that information, it's going to make the pre-approval process that much smoother. And trust me when I tell you, it's not as bad as you might think it is.
Chris, you brought up one interesting thing. I want to dive back in for 1 second. You mentioned self-employment people. Self-employment people belong in a lender. Is that not correct? Am I not correct to say that a mortgage lender or a mortgage broker is a safer bet than a bank with a self-employed or a 1099?
Right, just because there's going to be more options.
Yes.
Right? Perfect example is we just recently came out with a bank statement program that is perfect for self-employed. They're going to lend off of cash flow coming in from the business versus tax returns. And there's obviously criteria to the loan around that, and it might be a slightly higher rate because of the way it's underwritten, but a bank's not going to have that in most cases.
That's really interesting. So I think in a future episode, we'll do a talk about a bunch of different loans and loan options and talk about what's out there so everyone understands how many different options there are and how big of a menu there really is in home loans. Can you just give everyone your contact information real quick before we take off today?
Sure, guys. The best way to reach me, you can go directly to the website, which is chrisdevin.com. We are right on Route 53 in Norwell, 495 Washington Street, and feel free to stop by, give us a call. Once again, chrisdevin.com. Thanks for having me, Sean.
Excellent. Thanks for joining us today, Chris. Thank you, everyone, for listening this week. Remember to follow the podcast. If you have any questions, feel free to email them in, or if you have any advice for some future episodes, feel free to write to us. Thanks for following us this week. We'll talk to you next week.